And welcome to this Blockrevision episode. Episode will be just returning to talking about updates regarding economy, stock market, commodity, and cryptos. So it's the episode. We'll be returning to the normal version of where we were publishing throughout July, August, September, and right now I'll be talking through different sections. Maybe you remember the first be economy view, right afterwards talk about stocks, talk about cryptos, and right at the end there will be trade ideas. So if you are just interested in one of those sections, no worries. I just put a time stamps and that you might rewind the video to the exact points in time. So let's begin. Okay, so on the beginning, we will go through the most important event that has brought us to some drop on U.S. stock market, especially in tech sector. Fed minutes flag chance of earlier hikes, balance sheet rundown. There was an article on 5th of January on Bloomberg, where we found that participants generally noted that given their individual outlooks for the economy, labor market, and inflation, it may become warranted to increase the federal funds rate sooner or at a faster pace than participants had earlier anticipated. Some participants also noted that it could be appropriate to begin to reduce the size of the Federal Reserve's balance sheet relatively soon after beginning to raise the federal funds rate, the minutes said. So, as a natural consequence, we have seen yields increase further after 30 minutes. The capital is flowing to yields, and right after we could find that the minutes showed the FOMC is coalescing around the view that the economy is ready for broad-based removal of monetary accommodation, and the Omicron variant is unlikely to slow it down. So, at least for now, I would say, as the death curve of Omicron is not showing much of a threat to U.S. economy. So there is some hope that finally those interest rates will be risen. However, there is still January and February ahead, where cyclically those months were quite disturbing in terms of new variants that turned up, and the possible problems regarding how fast those variants may spread out among whether it's US or EU or Asia. So I would be very cautious regarding this roadmap, in which we would find that interest rates will be hiked right in the first quarter of this year, but as we find the Fed's new dot plot, the definitive tendency is that FOMC and the government will eventually rise those metrics, and interest rates will get finally within 2 or 3 years to back to 2.5 points. There is still some, I would say, doubt about whether Fed will be able to get back to those levels. By large, I would say that it's very difficult for government to finance its budget deficits or roll over maturing debt without deferred buying. So right now it looks like rate hikes, maybe even if happen, maybe too little too late, and finally quantitative tightening as a whole will be very difficult to run over. So yeah, the time will tell. But right now the stocks are really bothering about those tendencies. But as I said, everything will turn up. On the other hand, ECB right now looks like starts rising rates in early 2023, and not the other way around. So ECB is one of those entities that will be ready for an interest rate hike early, but not in 2022, but 2023, right after ending its bond purchases. So yeah, that's the tendency less optimistic than in the US. So I would say the chart of euro to USD will still have troubles, as we would find right here. We are trying to maybe regain some of a correction. However, we have still a way down ahead, I would say. So Euro USD may have its correction right after this recent slump, but tendency is still going back to 105 areas. So yeah, the Euro USD might have some problems with regaining much of its power against dollar. So that's ECB's tendency, and we are getting back to US. Right here you have applications for US unemployment benefits that rose slightly near historic lows, but it's still far from a threat to US economy. So unemployment benefits still ranging in this very tight area of 200, and I guess it's 220 that has been set on the beginning of December. So adding up these metrics of United States jobless claims for week average, we can find that we are right now oscillating within 200 points, and acknowledging that the maximum level of employment consistent with price stability may evolve over time. Many participants saw the US economy making rapid progress toward the committee's maximum employment goal. Now, if we just have a look at the 5-year chart right now, we can find that US economy is getting back little by little to those levels pre-pandemic, where it was right around 150,000 in the week. So right now it's something that is quite building up. Several participants viewed labor market conditions as already largely consistent with maximum employment. So even like this, the outlook is quite positive. So we could find that there might be no exact necessity in order to flow the market with another round of stimulus. But as I said, January and February might be those months that will tell much, and if the tendency will spread through next 2-3 months, we might be very in a very good position right over to begin another cycle and start forgetting about those pandemic problems. So recently, what Fed's minutes has brought to the market has been met with a aggressive selling among tech investors. Right now we can find it on Nasdaq 100. Right now we are on the levels unseen throughout a few days. I would get straight ahead to US 100, and right here on daily chart we can find that we have closed, or we are closing right now, talking about 640 points. We are closing or about to close, because there is still 3 hours to close the week. We are closing this candle right below recent two lows set on 20 of December and 3rd of December. So it might be bearish signal at whole, where after maybe some correction made by next few days, we may have see such of a going downwards. Right with this RSI tendency, we can find that we have tried to go above this 60-ish area, however rejected, and right now struggling with 43, 42. So US 100 is right now in quite worrisome spot, and there is a little support from the long only community, so it doesn't take much selling pressure to push the names sharply lower, which in turn forces more selling by the hedge funds. That was the point of Socorro Asset Management OP, where we can find quite of a bearish outlook. On the other side, if we just have a look at rotation between different sectors, we can find that throughout the year such sectors as small growth, IPOs, Bitcoin SPAC, there were the sectors of more risk than normal. So we can find that with this one, we can find that the liquidity on the market is evaporating little by little, and those times of high risk being in favor is winding down. Right now, it's more important to be cautious, and such sectors as utilities or even FANG or small value companies are taking more and more advantage with time. Right now we are heading to crypto outlook, and let's have a look at what happened recently. On the chart, Bitcoin is trying to stay above this 40,000 area. This area has been held in the past, and right here we had a resistance right there, another one right, a resistance that right after this has turned into support. So 40k will be defended strictly as we expect Bitcoin to rebound from here in order to maintain its bullish sentiment. Right now we are on a crypto fear and greed index heading back to extreme fear with 18 points on positivity. So right after this surge that we've noted on around 23rd of December, we are right now seeing the levels of negativity not seen since July. So 15 points were that has been noted yesterday. Now, right now is showing us that there is maybe a good chance to buy, but we need to think this over twice. In order to buy, or rather consider buying, we may have a look at estimated leverage ratio. So it shows us also the sentiment where lots of traders are trying to take leverage on whether Bitcoin is going up or down. As we found when it was a strict negativity around Bitcoin right on the May of this year, the estimated leverage ratio has been slumping. Right now it's inclining, so it means that the whole negativity is not as large as it was back then. So it means lots of investors that are using leverage is betting for gains. If we just have a look at funding rates, that is also quite of a neutral way to verify the sentiment on the market. Right now we can find that funding rates of all exchanges right after good to negative levels right now is also entering little by little the negativity. So historically there might have been a good time to buy, but we need to especially just verify on the market whether it might be a good or bad time. Right when it was negative funding rates back in the beginning of December, we haven't met a important support rate over there. Right here we are finding 40k, so it may be a good chance to rebound from here. With other metrics being converged, it shows like Bitcoin may get at least to 45,000 and maybe even to 53 in the nearest future. So what's behind those drops? There is definitely some of rumors about interest rates being hiked, and also that SEC punts again on NYDIG Bitcoin ETF, delaying decision to March. SEC in a notice Tuesday said another 60 days is needed to make a determination. The new deadline is March 16. So when we see Bitcoin surging by 16th of March, I would say that much all depends on the whole positivity of around the market. There is nothing like a bear market being started. From now we still have a chance to defend 40k, and right after this maybe build even high and all-time high, but it needs more time than just a couple of weeks, I guess. So it will be very interesting to watch Bitcoin's behavior around those areas. Another positivity we can find in social interest. spikes in deep buy interest on Twitter, Facebook, Discord, Telegram commonly can lead to mini bounces short term and volatility long term. So right now we can find that interest in buying those dips is also on social media above average. So we can find that, or even we are finding right now that this week is building up. So on a 1 hour chart we can find there are buyers stepping in. One of the sufferers, however, is also Ethereum, where JP Morgan said recently that dominance in DeFi sector is far from given. Most critical development for scaling the Ethereum network arrives in 2023. The network's 70% market share in DeFi could continue to drop, and is led by some of the men wrote in on Wednesday. So right now, as we just have a look at DeFi share of layer 1 blockchains and Ethereum layer 2 solutions are looking like there are more and more competitors coming up, and with, as we found with this sharding hasn't been introduced probably in 2022, there might be much of a quite competitivity that may put Ethereum solutions right on the sidelines. If we just have a look at where Ethereum is heading right now, we are trying to defend 3,000 area, but as we have found recently, there's, I would say, much more negativity around this chain than it was previously, because there are more competitors like Solana or Avalanche or even Terra Luna that are trying to get its chunk from DeFi market. So Ethereum is not the only one to run this DeFi revolution, and there might be much of a more of competitors on this area in the medium term run. However, to not be so much bearish sided, I would just put over quite of interesting news that have been published on Bloomberg. Nasdaq listed firm says it will offer the first Bitcoin dividend, and this dividend will be called dividend. So if you believe in further growth of Bitcoin, the dividends that will be payable to shareholders could be quite of an alternative to dividends that obviously by analyzing the mechanism of fiat money eventually losing up with value, in the contrary to dividends that if you just support the idea that Bitcoin's mechanism leading to deflationary pressures, dividends might gain up with value in time. So it's one of the news that could put more potential investors in the interest of Bitcoin. And right after we have market movers. So we are just looking at recently being the strongest sectors on the US market and also the world market as a whole. We can find that within 3-month period, the most I would say profitable sectors were financials, basic material, utilities, consumer, non-cyclicals, industrials, value as a whole. So the recent 3 months put a value rather than growth in the favor, and also short, as we can find, the inverse ETFs has been put in a limelight. Also dividend stocks and such sector as commodities as well. So we are right now going through a phase of a more like a risk on than rather risk off, and it will be very interesting to see where another quarter will put us in the market phase. Right now, let's have a look at economy calendar, and recent week has brought us quite of a substantial data from different jurisdictions, where, on example, in the US we had ISM manufacturing PMI that has been a bit slower than recently, but still revolving around 58, 59 points. And right after we had also from Europe some other data. Market composite PMI final right here, it was at 57, so we are lowering that tendency, but still nothing to be worried about. Inflation rate from Germany year over year at 5.3. It means we are still see the growing tendency in inflation rates. ISM non-manufacturing employment is right now heading back to quite substantial levels of over 50. And also another that I would like to mention, our employment change in Canada. Right now it's showing quite positive tones. Unemployment rate is decreasing. Non-farm payrolls, however, is also decreasing, so the payrolls are decreasing, unemployment rate is also decreasing, so more and more workers are getting back to job. However, the payrolls I would say is far from being satisfactory. Participation rate for labor force participation rate is increasing. Also, it's quite substantial for US economy returning to normal, but it's much more to be done. Non-farm payrolls, private, is decreasing as well. So there are more like a chaotic situation right now, but the next month's outlook may show some positivity that will be commented right here on the Blockrevision channel. And we are heading to trade idea section, and for today, and that will be not very surprising, that I would say that right now quite good opportunity will be in Bitcoin USDT chart. So Bitcoin USDT is one of the chart that is, I would like to say, is attracting attention of nearly every single investor that is trying to get Bitcoin as cheap as it eventually possible. So 40k might be a good opportunity to get some of it. So I'll be looking at the areas of 40k. 41 it may be a bit too expensive, but I would say it's still quite of an opportunity that Bitcoin will get to 40k within next 24 hours. So you may set an alarm right here, and if we get from 40k area, I would say, if I like to put a trading board from I would say 40 100, there is still a good opportunity to start such of a bet with risk-reward ratio at 4.1 with a position that starts at about 40-100 with a stop loss on 38,600 and with a target of 45. With this, if we had the first target, Bitcoin may get even higher. But the first one, the possibility of gaining 30%, is quite substantial. Very good trade. So be cautious within cryptocurrency. I would say this area of entrance. So I would find that we may get to 40.1k at least, but you may get even better price, and with this one heading back to 39.7 as we got previously back to 39.5, 59 I would say. So with this one, for the latecomers, I would say 41.1 is still a good area to enter. So there is still opportunity to get some chunk of Bitcoin and take advantage of it. Even if you are not a much of a very crypto enthusiasm, I would say you may scalp this situation and buy around this areas higher point and hold down to up to these levels that may get right back within 2 weeks, I guess, with the current volatility. Okay, so with trade idea, that's always the game of probability. So don't forget about putting stop loss or an alarm that will remind you to consider an possible exit if the trade won't go in your favored direction. I do expect this trade to work out within I would say 2 days. If Bitcoin will stay above this level, I wouldn't find this trade proposition valid. So that's it for today's episode. If you have any question, just put it in the comment section below the video, and if you haven't subscribed to the channel, let's do it. You will find much more quality content than it was before, and yeah, thank you very much for watching. In the next week I'll be putting a video and also some other sections that will show you much more opportunity for you, either you're a trader or investor. So don't skip it and just being updated. Stay tuned. See ya.